Joining me today on the line is President of Adrian Day Asset Management, Adrian Day. We're going to be talking a bit about gold's big moves in the last couple of days. Adrian, thank you for joining me.
You're welcome. Glad to be here.
So Adrian, is this the big correction in gold that some have feared and others have expected?
Yeah, I think it is, and it probably already has been. Let's face it, gold has gone up for, 11 years in a row, 12 years in a row, year after year without a negative, a significant correction. And that is very, very unusual in any kind of bull market, whatever it is, internet stocks, housing, Japanese stocks, whatever. There are always significant corrections along the way. And so I think this probably is that mid-cycle correction. But what I would point out to people who are perhaps a little upset or worried or nervous about this correction, let's just remember what happened in the 1970s when gold had a 43% correction in 1975-76, and of course we haven't seen that yet. But it fell basically in half, and then of course in 76 to 1980 it set off and went from basically $100 to $850. So I would expect that this next major leg up in gold is going to be very powerful indeed.
So would you say that we're still in a bull market right now?
Well, we're clear, depending on how you define these things, I would say we're in a long-term bull market, but in the middle of a significant correction. That's the way I'd look at it. But technically, we've lost over 20%, so that's a bear market.
Now, we've seen the short-term hits on the stocks, on gold ETFs, most recently $560 billion wash from central banks. How much further can this go?
Yeah, that's the real problem. When you get a big drop like this, that's not caused by one event, but a big drop like this, you cannot expect. I think you cannot expect it to rebound as quickly as it dropped, because there is collateral damage. First of all, there's very significant psychological damage. People are nervous to get back in. They want confirmation that it's going up again before they get back in, and so on. And then on a practical level, of course, there's margin calls, there's gold used as collateral, which is now worthless, so people worth less, so people have to put up cash. They get cash calls. They either have to put up more cash or they have to sell some of the collateral that's with the bank. So, across the board, anyone holding gold has losses, and if it's on margin or if it's used as collateral or whatever, then there'll be some more selling, yeah, no question. So this could last a little while. I don't expect an immediate rebound, but I'm not bearish by any means, and I certainly don't think that the bull market is over. I'm just saying we shouldn't expect it to bounce back anywhere near as quickly as it fell.
So do you think that gold has maybe lost its safe haven appeal?
That's a really interesting question, because when you look at what is happening around the world, the reality is, the truth is, that we would have expected gold to go up in this kind of scenario. We could talk all day long, of course, and you've had it on your site, the reasons that gold has fallen, as well as the fundamental reasons that gold is still powerful. So I don't think gold has lost its safe haven appeal at all. I think if, God forbid, North Korea dropped a nuclear bomb on South Korea, I think gold would certainly react. I'm not looking forward to that, but I'm just saying, I don't think it's lost its safe haven appeal. I think all we're seeing is really market action. Gold has gone up for 11 or 12 years without a correction, without a year-by-year correction, and it was just overdue for a significant shakeout, and that's what we're getting now. Remember, an awful lot of the people that jumped on board gold in the middle of 2011 in particular, and then again in the middle of 2012, were not, they certainly weren't gold bugs, and they weren't even people who really understand gold, but they were, by and large, they were hedge funds and institutions just jumping on a market that was moving. Well, those people, if you don't understand gold, you get shaken out, you get shaken out quite quickly when things turn against you. I'm not bearish at all. I think this is an incredible opportunity for people to buy, frankly.
So then would you think that more people would go towards more physical gold or physical silver after such a steep drop in price?
Well, I don't think they're going to run back in. Well, people never do. They want confirmation of the market. If in 6 months or 9 months we see gold trading between 1,300 and 1,400 for, 3-4 months, and then we see it slowly move up to 1,450, 1,500, that's when people will start to get back in, typically. There's psychological damage here. So the true contrarians among us are relatively few. But I would say under 1,400, and some of the stock prices at the prices they are at, this is a very, very good opportunity to get back in. But I do think, and it's an interesting point you raised, I suspect that this time around more people will go for physical gold than for some of the gold stocks, which have been, very, very disappointing by and large for several years. So people will probably just prefer the physical bullion, in their own keeping, whether it's, in their house or in a safe or something like that, yeah.
Well, Adrian, that was great. Thank you very much for joining me today.
Oh, thank you very much for having me.
And thank you for watching. If you have any questions or comments, please don't hesitate to send them to newsfeedback@kitco.com. You can also follow the conversation on Twitter @Alex_Letourneau. Have a good one.